Hello, my name is Thomas Kralo and welcome to my YouTube channel where we talk all things trading, finances and money in general. Now this is gonna be lesson number 4 of my learning how to trade properly challenge, a 10-day challenge, and if you haven't watched the previous 3 lessons, then I strongly recommend you doing that before watching this one. Alright, let's get right into lesson number 4. So lesson number 4 will be on trading psychology, which once again, in my personal opinion, is perhaps even more important than correct and proper technical analysis, the correct entries and exits, correct risk and money management, and how to actually make the big bucks. Trading psychology is something that is so commonly misunderstood and so commonly misused and just completely ignored. And a lot of traders who actually have a really good trading structures and trading systems, and they actually are capable of making good money, but because of psychological effects and psychological strains and stresses and difficulties, they somehow manage to actually lose money even with the best trading systems. And that is something that I've been through, and this is something that my mentor taught me 7 years ago. And I've been trading with correct mentality, with correct expectations and correct approach to this business from a psychological standpoint, and that allowed me to save myself a lot of stress and understand the pitfalls that we are about to discuss here as well. So number 1, the most probably important aspect of trading psychology is the expectations and the mindset. A lot of people start trading with an expectation to make a shitload of money. And quite honestly, it's okay, it's normal, and this is what this job is capable of doing. It's capable of making you quite wealthy quite quickly. But it's also one of those huge pitfalls that a lot of people just drop right into these traps of these expectations, because trading is difficult, and not just technically but psychologically. So when you're trading and you are sitting there for 9 hours, 10 hours per day, sometimes even more, my personal trading and just is in a way that I trade quite a lot of hours per day, because there are quite a few things that I have to keep track of. I have to keep track of the technical analysis as well as the fundamentals, the background noise kind of thing, what's going on in the world, in the global economy, the news. This is what I have right here in my laptop. Just set out my Bloomberg subscription. There are many things to keep track of, and you're constantly in this job. And sometimes you're sitting there for like a week, many hours without end in sight per day, and you have actually lost money. And this can be incredibly frustrating. It's just a nightmare. But when you are expecting that something like that might happen, and believe me, it will. You will at some point lose money. Some traders are on internet, they advertise their success rate at about 90%, or some of them actually say 99%. This is such horseshit. It's just not possible. Even as I said in the previous lesson, that my success rate is in the 40s percentage-wise. And thanks to my correct risk and money management, which is going to be also discussed in this challenge, and in one of the lessons, I believe lesson 8 or 7. Yeah. So and thanks to that, I'm able to make a lot of money, even with a 40 to 45% success rate on my trades. However, that means that I have a lot of losing trades. And when you are psychologically unprepared and you are psychologically only thinking about making money, and you're already spending that money, you're already driving a Rolls Royce or a Bentley, and you're flying in helicopters and whatever things that you want to be spending money on, and you're not thinking about the seriousness of this work. You're not thinking that this is serious business. This is one of the toughest businesses out there, in my personal experience. I have tried quite a few things when I was younger, before I met my mentor who taught me how to trade, and I gotta tell you, this is a frustrating thing to do, and this is just in general a really difficult business, and you have to expect it to be. And then in this way, you will, somehow live through those negative, dark days easier because you know that it might happen and that it probably will happen. And when you expect this job to be difficult, then it's actually gonna become less difficult, because if you believe that it's easy and that it's free money and that you're just gonna take a short 2-week cheap or actually free trading course from some fake guru and that you will start making a lot of money, then when you will face the brutal realities of the financial markets, you are gonna be just devastated because the market is gonna eat you alive. And that's the thing, that's the reason why trading psychology is so important. It's just basically setting out those stages and understanding those psychological stages and having that correct mindset that will allow you to have a lot less stress in the process. And that's also, this amount of stress is also a big reason why so many beginner traders and just in general traders actually lose money and quit trading altogether because of stress, because they had wrong mindset and wrong expectations. And yeah, once again, you cannot treat this as a hobby. Trading, serious trading, is not a hobby. If you treat trading as a hobby, then you're pretty much going to be gambling. So, well, yeah, I think that I should buy this stock or that stock, or maybe I should get myself a really high leverage position on some futures and make a shitload of money. This is just gambling. This is not serious work. This business requires a lot of attention and a lot of focus. And you must expect to do that. Otherwise, you'll be just set on a collision course that's gonna just happen sooner or later. And yeah, please treat it as a serious business. Otherwise, don't even try to day trade or to trade in general. And the next topic on trading psychology is the stages of any trader. And those are extremely interesting. When my mentor laid those out for me, I did not really believe in them because they seemed quite simple, but he actually prevented me from a complete mental breakdown, perhaps. So 3 stages of any trader. Pretty much 90% or more of traders go through these 3 stages. Stage number 1 is called greed. Greed is when you're getting right into trading and you're going right into money trading, and you're probably trading with a lot more money than you should be trading, and you are just out there to get as much money as possible, as fast as possible. And of course, the market is gonna, show you who's the boss, and you'll probably start losing a lot of money because of that greed stage. When you're taking every single signal, each single entry, is it good, is it bad, who gives a crap? Just take it, just open a trade, and I'll just make a lot of money. That's basically the idea. And of course, this greed stage leads to heavy losses. Some people lose everything, the whole trading deposits. In this stage, some lose a fraction, but this does happen to the majority of traders. Now, the next stage is gonna be fear, and this is the stage that a lot of traders never get through. And a lot of traders just get stuck on that stage and just quit trading altogether. Fear is a really difficult stage to get out of. You're basically afraid of everything. You're afraid of the market. You're afraid of clicking, even just purely clicking, opening a trade. You'll be afraid of setting out your orders, limit orders, stop orders. You will be afraid of this job in general because you've just lost a lot of money and you probably cannot or don't want to afford to lose anymore, and you're losing trust in this business in general, and you're just basically afraid of everything. And I was in this stage for quite a while, even though I was taught by a really strong, a really powerful, smart, and extremely rich trader. I still went into this stage. So even people like me who are lucky enough to meet a guy like this who actually agrees to teach them and he actually offered to, I did not ask him to teach me, he offered to teach me. And even I went through this stage, and it was quite difficult. Remember, I knew exactly what I should have done. I knew the structure, the signals, all the technical rules, all the fundamental rules. I knew everything that I had to do, but I would just be afraid of clicking. And it took me quite a while. I had to take some time off from trading and not trade at all. And so it took some effort to get back into trading and actually move on to the next third, last stage, which is risk and money management. So you're not expecting at this stage, you do not expect to lose money, you do not expect to make money, you do not expect anything. You just have your screens, like a bunch of screens that I have behind me. You see an opportunity which is presented to you, that you see thanks to your way of analyzing the data, and you just basically click it with an amount of risk that is logical for that specific situation. That's it. And that's how you're trading. So if you lose money, well, you're not that emotional. When you make money, you're not that emotional either. Because it's very important not to get angry because of losing trades, and it's also quite important not to be too happy about the winning trades, because it might again lead you to the greed stage, and the cycle might happen over and over again. And when you are aware of these potential cycles and these stages, it's going to help you a lot to again form correct expectations and have that correct mindset of a strong, prepared trader. Then the next thing is when not to trade, and this is also a huge one, and I still use it until this day. If I have a bad mood, if I had an argument with my mother, wife, girlfriend, whoever, maybe somebody on the street pissed me off, or maybe I just woke up angry, there are those days. I'm not going to be trading on that day. Trading, once again, is an emotional job. And if you're already emotional before you get to your trading station, just forget about it, because you are going to get too angry too quickly, and you might go into an uncontrollable spree of opening trades. And it happened to me once, and I lost a lot of money. So that's the reason why. And a lot of tips that I'm giving in this 10-day learn how to trade properly challenge, the tips that I'm giving are actually based on my personal experiences, so they are not off of internet or anywhere else. They're just my real experiences, and that I think will be useful for you as well. So once again, if you're angry, upset, or too happy, or too confident, don't trade. When you're trading, you must be completely neutral. You must be in a normal mood, slightly good mood, but these emotions, they should be kept in check and in complete control. Now the next thing is just a simple term, but you must remember it. And if you want to get into professional trading and you want to make it a full-time job, remember this: the market is always right. And it's quite simple as well, like so many other things. There are just so many of these things. The market is always right. And there are so many people who get angry at the market. And I would lose, $500, just an example. And I'd be angry. And I wouldn't be angry at myself because I did something wrong. I'd be angry at the market. I'd be angry at the screens. And I actually broke a few keyboards throughout my 7 years of trading. So I'm not afraid to admit it. I'm an emotional person. And I did, in the very beginning especially, I would blame the market. I would think that the market is against me, that it's all one huge setup, that it's all bullcrap and stuff like that. I would always blame the market. Never blame the market. The market is always, always right. And as soon as you start understanding this, then you will be more inclined to actually look for the negative aspects of your own trading, maybe your trading algorithm, and blah, blah, blah. So you start looking for causes in other sections and aspects and different corners, and not in the market, because the market itself is not guilty, and believe me, it's always right. So don't try arguing with the market. It's not going to help you at all. And the last tip for this lesson is going to be the two types of money. And this is a big thing. A lot of people, for example, they have $20,000 in savings, or let's say $5,000 in savings, and they decide to start trading with $2,000. They put that money into their trading account, and they start seeing that money as just general money. So the money that they could buy food with, pay utilities with, or maybe buy some old car, or maybe a new smartphone. So they start seeing that as regular money, and that is a wrong approach, and that is a wrong mindset. When you're finally ready to trade with money, and you're finally ready to take that step, you've been day trading for a while, for a few months at least, as I've mentioned in previous lessons, then when you're ready and you're ready to risk this amount of money, for example 2,000, then you're putting it in there and forget about it. Imagine that it's gone, it's not there, it's just basically an instrument. It becomes a tool to make more money. Don't see it as things that you could buy with that money. That's a huge mistake that a lot of people make in terms of trading psychology. I have personally two types of money. I have my money that I have in cash in my pocket, or for example a bank account, and I have money in my trading deposits. I have many different trading deposits for different markets and different trading styles. So once again, one pocket and the second pocket. One pocket is the money that I'm not even thinking about. I don't, for example, if I have a few $100,000 in my trading account, one of my trading accounts, I do not think that it's my net worth. So I'm not thinking that this is my money. This is my instrument to make more money. And the real money that I have is actually in my pocket or in my bank account, the real cash that I possess, that is not at risk. So, and this will allow you to, again, keep a cool head, to understand that that money that is your trading account, these are just numbers. These are just numbers to use with different analytical tools to make those numbers slightly larger, than even larger, and then make huge numbers out of those numbers. That's it. This is the number game. And don't think about that money as something that you could buy with it. This is a simple tip, but trust me, if you will use it and you will work on your mentality, trading mentality in this way, it's gonna help you incredibly. Now, if you want to learn more about trading, and if you want some more trading tips, please click on the link below in the description and register for my free webinar. I'm doing quite a lot of those, so if you're interested in trading and more tips, once again, click the link below and register for my next free webinar. And also please follow me on Instagram and feel free to send me direct messages and ask me questions, trading related questions. I'm always happy to help. But if I'm not responding right away, please give me some time, because I have a lot of people contacting me. And the last thing, please subscribe and hit the like button, comment. I'm really keen on knowing what you think, and maybe there is some specific topic you want me to discuss in the next videos after this 10-day learning how to trade properly challenge. So looking forward to that, and thank you for your attention, and I'll see you in the next lesson.